You're listening to Lender Lounge with Kevin Kim, a podcast dedicated to the private lending industry. I'm Kevin Kim, and my goal is to sit down with key figures in the private lending industry to talk about their business and their personal lives. We'll get their takes on market conditions, the industry at large, and their personal stories. Overall, I really want to learn more about how they started and grew their businesses. So whether you're a lender, a borrower, a vendor, an investor, or anyone just interested in learning more about private lending, this podcast is definitely for you. Thanks for tuning in and enjoy this week's episode of Lender Lounge with Kevin Kim.
Have something new for us?
Of course, but better. Magical, self-healing loan pixie dust.
Pixie dust?
Magical pixie dust.
And it does?
You just sprinkle it on your loan, and it does absolutely everything from start to finish.
Everything?
Oh yeah, everything. If a new loan comes in, sprinkle pixie dust on it, and everything is funded.
How does it know what loan to approve or how to pay?
Did you not hear about AI?
What about communications? Texting?
Oh, it knows.
What about borrower docs?
Or dealing with credit checks or appraisals, titles, fees?
It deals with it all.
So you mean we won't have to work anymore?
Never again.
And if something goes wrong, who handles client care?
Nothing will ever go wrong, obviously.
Sounds too good to be true.
That's not even the best part. Biodegradable, cheap, runs 24/7. And you won't regret it.
Heck, let's all go to the beach.
There's no such thing as LOS Magical Pixie Dust. But we have the next best thing. Presto, Next Gen LOS by Liquid Logics. We are simplifying the industry, saving you time and money in your end-to-end loan process, and bringing all the pieces of private lending to one system. Now, we can't promise you won't have to be involved along the way, but we can promise you won't regret having Liquid Logics on your side.
All right, guys, welcome to another episode of Lender Lounge with yours truly, Kevin Kim. We are in my office at Jurassic headquarters, and today one of our really good friends is visiting with us. Rocky Butani, please introduce yourself.
Thanks for having me. I'm Rocky Butani from privatelenderlink.com, and it's a website that lists private lenders throughout the country, and it's a valuable resource for people to find lenders.
And I want to ask you, because Private Lender Link is probably, I mean, you have some competition, but in private lending, your website is kind of the go-to place for like listing your company, what you do. And you've grown it. I mean, now you're everywhere. You're at all the shows, and we see you, and everyone, household name now. But let's kind of take a step back, like a few years back, like because you've been in the space for as long as I have. So like, when did all this start off for you?
It actually started in 2010.
Oh, back then.
Yeah. So
okay.
I launched the first version of the website in 2010.
So you were just, what were you doing before that then?
So before that, I had a business doing commercial property marketing.
Okay. So you were always kind of in a real estate marketing kind of. Okay.
Yeah, okay. Yeah. And then before that, it was a virtual tour business for residential, and I wanted to get out of residential. So I started this. It was kind of a unique concept where if a commercial property owner wanted to sell a property, instead of hiring a broker, they would hire me, and I would just do the marketing. I'd do a video shoot, make a website for the property, put it on LoopNet or CoStar or wherever.
Oh man, back in the day before they did all of it, like before they had the whole. Now it's standard practice.
Exactly. Yeah. Now everyone does it. Yeah. But I had this idea to offer the service, and the idea is I would charge 1% instead of what the brokers would charge 2, 3, 4, 5, 6%. And it was a failed business model, so it took me a while to figure that out.
No one was adopting it. Is that what the problem was?
Well, all the property owners loved it, but then the recession hit, and my model was that I'd get a little bit of money up front, but then I'd get a commission if it sold, and nothing was selling.
Everything
was overpriced.
Yeah.
And when I really got the business going, it was a national service. So I got flown out to Minnesota. I came to Southern California a lot. But then the recession hit and none of these properties were selling. And then I just realized it was a failed business model because in the end, even though I kept at it and some deals happened,
right,
the fundamentals weren't there. That it just, I realized these property owners couldn't sell their own property.
Right.
They really needed a broker. And I originally thought that in commercial real estate, it'd be different than residential, where you'd have more savvy investors or savvy property owners. And it wasn't the case. They're always emotional about, getting offers. They wouldn't answer the phone. Someone wanted to look at the property. They were like, I'm on vacation, so.
And with commercial, you have a lot of passive owners. And so property managers take care of everything, especially with the smaller strip centers and stuff like that.
Yeah.
But, okay, so you've always been in the marketing side of things. So you did that, and then 08 hit, 2009, and then 10 hits. Did you just fall upon private lending? How did that happen?
I read about it in a magazine. There were these commercial real estate magazines I used to get, and I read an article about, hey, no banks are lending. Private lenders are the only ones that are lending. And so at the same time, I was trying to figure out what the next business was, because I realized this commercial marketing service wasn't going to be a good long-term business.
But the model is somewhat similar. If you think about it, right?
It is, yeah.
So when did you make your first kind of foray into the space then?
Well, so I was looking for something unique that's real estate related. Sure. I liked the finance side because I didn't want to deal with the property side, which I was kind of traumatized from that. So I liked the finance side. I wanted to build some sort of marketing or lead gen business that was just easier to operate and that could last for a long time and go through recessions and still do okay. So I just wanted a long-term business that I could say, okay, I've already done 4 or 5 other businesses and most of them failed. So I just wanted a good, solid business that was kind of a niche market or a niche service that wouldn't have that much competition. So I read this article about private lending. I'd never heard of a hard money loan or a bridge loan. And then I started doing some research and I realized there was nowhere to find these lenders. And the only resource I found was Pitbull Conference had their own hard money directory. But the problem is that it only had a name, an address, and a website address and a phone number.
No information.
And you didn't have any information.
And back then, Scotsman guy wasn't really a thing either. So,
it was smaller. So the Pitbull, their hard money directory was great. It was a huge database. But my plan was to create something where you could really learn about the lender and I would vet the lender and make sure they're reputable.
Right.
So anyways, I had this idea and I thought, okay, let me call up some lenders and see if they'd if they'd pay a fee if I sent them a lead, or or it was a referral fee or a per lead fee. So I just started calling up a few lenders that I found. And meanwhile, at the same time, I was getting emails from Lone Oak Fund, which was one of the bigger funds in California, and they were sending out emails to all commercial real estate professionals.
Right.
And so I called them up and I said, hey, if I sent you a lead, would you pay a referral fee? And they said, yeah, sure. How much do you want? And I said, well, how much do mortgage brokers get?
Right.
And I said, 1 point. I said, how about half?
Right.
And so I came up with that idea where they wouldn't pay anything up front. It would just be performance based.
Oh, nice.
And then I tested it out. I built a very small makeshift website just to play around with it and did some advertising and I got leads and nothing closed, but I thought, okay, this is kind of working. I'll get a few more lenders. I ended up getting about 10 lenders that agreed to do it.
That's quick.
Yeah.
Is it all 2010, 2011? What year was this?
It was 2009 when I started testing it out, and then early 2010 I actually started building the website. So I built it myself.
So private lending was really in its infancy back then. I mean, we were all coming out of the recession. Everyone was still fighting off. The recession.
Yes.
Everyone was still knee deep in it. It was pretty bad. That's cool though.
Yeah.
You saw an opportunity, and did you identify you kind of indicated this. Like, I always talk about how fractured the space still is. Like back then, it was. You can't even call it fractured. It barely existed from an organizational standpoint. There were companies that did it, but you really didn't know, right? Like, is that something that those kind of is that an opportunity sign for you? Those kind of structures or the kind of arrangements you see in the marketplace?
Yeah, it was more that that everyone needed private lending because
Right.
they couldn't get
It was in
finance
high
anywhere
demand.
else. Yes, it was
Right.
high demand, but there wasn't that much supply then. There wasn't that many lenders back then, so they
Right.
were hard to find. The lenders didn't, market themselves very much.
Right.
So it was, I saw an opportunity because I thought, okay, there's a lot of these private lenders out there, but there doesn't have to be too many. I just need to be able to promote the ones that are
Right.
willing to put themselves out there.
It's funny because like online now, I mean, there's a lot of different types of company like websites that are trying to like, for lack of a better word, almost aggregate the data and information, but they just like you said, they're still just kind of like, here's the company name, here's the email address, and the states they lend in. They don't tell you what they do. There are other places like, there's magazines that have like different directories, but it's hard to navigate. I feel like, I mean, I can't speak for anyone else, but like if I'm trying to figure out, okay, who lends, I mean, from my standpoint, like who lends in some obscure state, like Maine, right? And who does, and I can narrow it. I go on your website.
Yep.
And you've created this kind of like, not necessarily, I mean, we have trade shows, we have kind of community organizations in the industry, but you've created an online place for people to really interact and people to find you. If you find a lender, let me ask you this, so you were creating a lead gen platform and also kind of a listing website for lenders out there. How did you attract on the other side of the coin, like getting the borrowers to come to you? That's a very, very challenging thing. Everyone wants to know how to do that. And like, you've been doing it now for more than that now, like 12 years now. And so, and it's been evolving, right? And your client list is huge now. You represent a good chunk of the industry. A lot of our friends, a lot of mutual clients. Like when you were coming up with this idea, like was it the commercial business, the commercial real estate business before that helped you drive traffic that way, or just your marketing?
No, it's totally separate. It was all organic SEO, all organic Google search.
SEO back then.
That's it. And it took about 3 years before this site started to rank.
Right.
So when I launched it in October 2010,
right,
it took almost 3 years before I started ranking and before I just get leads randomly from Texas or most of California.
Most of your efforts were done through was it just marketing, like online marketing back in 2009, 2010?
Yeah, and when I started, I didn't have a budget. I didn't want to go into debt,
Sure.
putting everything on a credit card. I didn't want to try to find investors.
Right.
I had the other business I was still operating,
right,
to pay the bills, but I knew it was just going to phase out eventually, and it just took that long for it to show up in Google searches and have enough credibility and enough content. I had to keep adding lenders. I had to keep adding content to the site, and then it finally hit a point where if you typed in, private lender California or Los Angeles or Bay Area, I'd show up.
And back
number
then,
one
SEO
or two.
consultancies didn't really exist, so like you had to figure that out on your own, right?
So I learned SEO on my own. I just took these lynda.com courses, which is now LinkedIn Learning.
Right.
But I learned everything from there. I learned web design, I learned SEO, and I really, when I built the site, I planned it really well in terms of the structure and the keywords and the URL. So I really learned the basics of SEO, and back then it was good because there wasn't that much competition. The only competition I had were the lenders themselves, and even then there weren't that many lenders that had websites that were built well with
I mean, there's still a lot of bad websites out there, and back then they were terrible.
Yes,
I remember when I joined this firm, and I was like looking at these. I haven't even used to working with banks until then, and I joined this firm, and I was like, these are the people we're dealing with. Like this is barely a website.
Yeah.
I'm getting an AOL email address. It's like, what's going on? I mean, we've evolved since then. I think the industry has become very much more professional and polished over the years. But like, and as I've evolved, a lot of us. But like back then, it was. I mean, literally, like it was the Wild Wild West back then. 2010. I would say 10 to 15.
Sure. Yeah.
And I mean, tell me about that. But coming. How did you guys grow? I mean, I don't want to say you guys. A lot of people don't know this, but you're still a solo shop. You've been running
I am.
Lean and Mean, just you, and then some outsourced servicers this entire time, the past 12 years.
Yeah, it's good and bad. I try to keep it simple. I try to automate stuff, but
we all thought you had this giant in-office team, and then it turns out it was just you and a couple outsourced servicers. Right?
Yeah, exactly. Yeah.
Is there a reason for that?
Well, I've just always been, I guess I don't know how to explain it. it's good and bad. I try to keep it simple where I don't want to manage people. I've just never done it before. You know, I know eventually I'll have to. I've just tried to put it off and delay it as much as possible. But
you like getting out there and doing the song and dance like all of us we always do every other month, right?
And I love it. I love going to all the conferences.
Right.
Even if I know a lot of these lenders, I love having new conversations with them. Or you know, it's really valuable. But there's still a lot of admin stuff that I do myself, which I shouldn't be doing myself. So I've tried outsourcing some of that, but it's almost like I have to have someone full time. To do that, and they could be remote. They could be you know, somewhere in the U.S. I don't really want to outsource it international, but yeah, I really have. I've tried and I haven't tried hard enough. So eventually I'll get to that point. But the challenge is it's hard to grow,
right?
If I'm just doing it by myself.
I would beg to differ in one respect though, because you guys, I mean, the website has grown from a user standpoint. It's to the point where, like before, like. I'm going to discover new lenders on your website, and then I'll search them again, and they'll be on other websites, but they're always going to be on your website. I feel like you guys have gotten a really in-depth reach. Now, when in doing that, what has helped you, I guess, broaden your user base when it comes to people signing up with you, right? Your client base, if you will. Has it been all the trade shows that you attend? Because you go to all the ones that we do, plus I'm sure you go to the ones that we don't go to, right? So. Like you're at a trade show, what, once a month?
At least once a month. Yeah.
Usually twice a month sometimes.
Yes.
Right? When we're really busy.
Yeah.
Pre-COVID, you're probably what, like twice a month?
Exactly.
Yeah.
At least one a month, and then some months, like in the fall, it's always busy.
Right.
Two each. But you know, the thing is, even if I didn't attend all the industry conferences, I still have a ton of lenders that have signed up or asked to sign up, and it's a challenge because I can't list everyone. There's only a certain number of leads that come in and a certain amount of traffic.
Oh, so you're having to say no sometimes.
Yeah, I don't want to overload the list, and then the lenders that are listed get fewer leads and fewer looks and page views. So it's tough because I want to do business with everyone, but I can't.
So you're being very cognizant of making sure that you're servicing your clients as well. They're getting good value out of it.
Yes, and it's even got to, you know, in some states, because the listing is broken up by state, the lenders have to pick and choose which states and which loan types they want to be listed in.
Right.
And certain areas are overloaded or getting close to
California.
maxing out. Yeah.
I mean, it's completely saturated.
Yes, But I increased the pricing in California, so that's a bit under control. But now that, you know, it's Florida and Texas, especially Florida. So many lenders want to lend in Florida now, so I really have to control how many show up. But yeah, like I said, even if I didn't do the conferences, I've already had all these lenders just reach out and say, hey, I found your website. I want to be on there.
A lot of referrals?
Not even referrals. Usually what they do is the lenders will go do a Google search. You know,
the competition.
Trying to find their competition. They see the website and they say, hey, I want to be on here. And
it's the best way to make it work, right?
Yeah.
Say, hey, my competition's doing so should I?
Yeah.
It goes back to SEO and online marketing, and you jumped on that game very early on as a necessity. But you know, in our space now, everyone's doing it. Like it's SEO is now a household word, and I don't want to get your take on that. Like, you know, what can a lot of, like, you know, these smaller guys, you know, as they're starting up, if you have any advice for them, like how can they, you know, embrace digital marketing and really do it on a budget? Because you built this company on a budget, and you've succeeded, and you've also kept it lean. I mean, this entire time. Like if some of my clients are, you know, some of my clients are just starting up. They come from another shop, or they're a former investment banker or whatever, and they're getting started. A lot of times there's stuff that we don't really have any advice about, like SEO and digital marketing. Like any feedback for them on that?
It's, you know, what I tell people is it's not easy, and it's not something you can just do one time. It's just an ongoing effort that you have to constantly work for. You have to.
Should they go and learn it like you did, or should they hire someone?
Just hire someone. You know, it's lenders are in the business to lend. You know, my role is more marketing, so it makes sense for me to, or made sense for me to learn it and kind of do it, and it's very valuable. But there's lots of marketing agencies out there that can help with that. But even if you find an agency, the tough part is you have to keep adding content and different pages to your website, and educate
them too. A lot of them, they don't understand.
Yes,
right.
Yeah.
So I mean, have you ever been tempted to do that, to offer that?
I've been asked a bunch of times. There was a time in 2014 where I helped 2 or 3 different lenders build their websites, and the SEO was so good that even now they outrank private lender link sometimes. You know, so they were in the Bay Area. I had close relationships with them, and they said, hey, can you help with the website? And I said, look, I'm not a web designer. I'm not going to, I don't like doing this thing one time and you pay me a fee. So we worked out a deal where they'd pay a fee whenever they close deals or something like that. And it just didn't work out.
It taught you a lesson though, like this is too much for me, right?
Yeah. It worked for in some cases, it worked for a little bit, but in the end, the fundamental was just, look, I felt bad charging these lenders a fee when it got to a certain point where they'd get inquiries through the website without my doing. It had nothing to do with me. It was from their own marketing and their own network. And then I just told them, look, this doesn't make sense. We don't need to keep doing this. But
and let me ask you this: over the years, now 12 years now, you've added and removed features. Has it always been based off like people, like clients asking, or hey, what about this opportunity? How have you added and removed features over the years?
It never ends. There's even now. So let me take a step back. In 2017, I hired a marketing agency out of Canada to rebuild a website because I didn't want to do it anymore. It just it outgrew my expertise, and I wasn't really that good at it when it got more sophisticated. So I hired this company called Reaction. They're out of Alberta, and they're a marketing agency, but they're really good with websites. So they rebuilt the website from the ground up, and so I collected a lot of the features that I just knew everyone would need. And I do get feedback, and a lot of the feedback or a lot of requests I get is for data integration, which I haven't done a good job of, but that's all in the works right now. Right. So this year that'll all be set.
When you say data integration, like data that the lenders are feeding you about what they're doing, or
no, the other way around, where a lead comes in and they input the data into private lender link, and all the lenders just want to dump into their CRM or their LOS.
You want the
system
website to feed the leads directly without you getting involved.
Yeah. So things like that. There's not too many requests that the lenders have. We focus a lot more on the user experience. But over the last 3 years, even when the new website launched, or when the first,
I remember that, I was like, this is so nice.
Yeah, but it's been evolved, and it's constantly being upgraded. So I always have a budget set to just spend on web development, or they call it web innovation. But even now, we're doing a major overhaul of the design, making it more modern. There's a new loan form experience that we're building.
Cool.
So yeah, maybe by the time people listening to this, it'll be implemented.
Look out for that, guys.
Yeah.
I hope you're enjoying this episode so far. Before we move on, I really want to tell you about a great sponsor that's joined us for the show. Private lenders, this one's for you. If you're not currently automating your internal operations, you're likely spending a lot of time on tedious manual processes. If increasing efficiency and generating more business is your company's goal, automation is the answer. Recently featured in Forbes and Entrepreneur Magazine, Mortgage Automator is a complete loan origination and servicing platform designed specifically to optimize your processes and automate your tasks, including all of your communication with the various parties involved in your transactions. It can help you generate and send off documents, such as term sheets, in seconds for digital signing. It's also able to handle your payments, collections, accounting, and so much more. Focus your team on growth and let Mortgage Automator handle the rest. Go to mortgageautomator.com to book your personal demo and find out how Mortgage Automator can help your business grow. And there's a lot of stuff going on in the industry, but I want to take your take on just like your feel on the industry, because we interviewed a lot of lenders and their CEOs, but like we've never really interviewed, I'm partnership with law firm, I guess is the only kind of vendor perspective on it. But you've got a very unique perspective. Not only have you been in the industry since its infancy until now, it's on fire, it's grown massively, and you've seen a lot of folks just grow immensely, sell off, not make it. And, the evolution of the space as a whole. And I want to get your take on it. Like, how were things back in the early days, and what are your thoughts on the space today, and how do you compare and contrast it?
Yeah, it's amazing how it's changed so much. There weren't that many national lenders at the time. It was more local
one state,
lenders,
two states,
or even one metro area.
Yeah,
not even one whole state.
I remember it was like we lend in LA.
Yeah.
So it's just crazy now.
Yeah, and they wouldn't even touch San Diego. They would just say LA, maybe Orange County, and
right?
Just that LA metro.
Yeah,
they wouldn't do Inland Empire. I mean, it varied, but it was mostly local, and there wasn't as much capital then, especially in 2010, coming out of the recession. It was it was just everyone was local. Finding capital was just not that easy. It was all individual.
It was all high net worth investors. Yeah. It wasn't driven by any kind of Wall Street money. It was just
not at all
private investors, retail investors.
Yeah. So it was, and there weren't that many lenders out there. It was just a whole different world. And then I think around 2015 is when institutional capital first started dabbling in the space.
And we heard the idea of sell your loans, and it was like, what?
Yeah.
And
there's lenders I know that have had that model to sell loans, so they'll fund it and then they'll sell it immediately after, but they sell it to their network of net worth investors.
Exactly. Yeah. And then the idea of an actual business model that's backed by either a financial institution or hedge fund. It took 5 years for them to get reacclimate to our space, if you will, because they wouldn't touch anything that looked like a mortgage, but they did in 15. So let's look at from 15 to 21. I mean, it's been a crazy ride. I mean, we've seen double over and double over again, and our firm is a good indication. Your company's a good indication. We've both grown significantly over the years. And like, what do you think? I mean, good and bad, because I have my personal feelings about Wall Street, but how about your stuff? Like, what are your views on how things have changed over the years?
I think it's gotten less, no disrespect to the institutional guys, but it's gotten less interesting, if you will. It's
become very commoditized.
Yes, commoditized is a good way to put it. Yeah, it's very standardized. It's kind of like, it's almost like the consumer lending now, where it's, what all the loan products are. Most of the lenders that have that model have very similar programs and terms. So, when I meet a new lender, I onboard them onto the website now. Most of the time, I know what their lending program is.
Predictable.
Yeah, exactly. It's the institutional box.
You remember when guys used to do seconds and thirds? I mean, come on.
Yeah,
it's crazy. Now we're dealing with 100% firsts, which is okay, which is fine. But like, I feel like everyone fits within the same credit box. Yeah. No one even touches. Like, a lot of guys don't even touch commercial anymore. And they used to do all of it.
And it's probably because it was easier. It's easier to just.
Wall Street's made it super easy. And I agree with you in the idea of Wall Street creating, but I still have this, like, because I'm a securities attorney and I do funds, and that's the one thing I hold dearly against is, like, there are some funds out there that are still doing amazing volume without Wall Street's help, without, we had a couple of guys on the show. Good example is like the guys out in Arizona, a Capital Fund, shout out to Noah, a good friend of mine. Like, they've been doing this purely with high net worth investors and their pure balance sheet, and they don't sell loans. And it's like, those people are still like showing me like that model has not died yet. But like, I was on a panel last year, and another good friend, Ryan over at Salute, is like, I think he personally thinks that the market's going purely in that direction. I mean, what do you think?
You mean purely to institutional?
Purely to institutional. We're going to be like essentially like the correspondent world you see in conventional. Right, everyone's going to be a correspondent. There's going to be your major shop, your Fannie Freddie, Ginnie, whatever, and everyone essentially is going to be a correspondent or some type of loan originator. What do you think?
I disagree with that. I think even today there's all these lenders that have been doing this for years, maybe even more than 10 years.
Oh, yeah. We've had guys on the show 20, 30 years now.
Yeah. And they have their model. They're very wary about the institutional capital and the reliability, or because they just have their system and it works, and they're just against that whole institutionalizing.
Let me ask you this, because you interface with more lenders than I do even, and And I want to ask you, are there still people holding on to that hope, like they're not letting go of it and they're just sticking to their guns?
Absolutely, and they fundamentally disagree with that model.
Their thesis on from an investment standpoint.
Yes, and they also can't do the creative loans that they can do with where they could just fund it themselves and either portfolio it or have it funded with accredited investors.
Right.
You can't do some of those creative loans with institutional capital.
You can't do creative loans, but also, our industry was built on speed, and speed means a lot of times no credit, no appraisal. We're asset-based lenders at our core. And a couple of my clients have been telling me, like, since Wall Street and the aggregators are requiring all those things now, we're able to win because we don't require that. And we lend in the MSAs that we know, and we're only going to do that. And they've been killing it. I've been hearing they're having a lot of my balance sheet lenders are doing record months. I mean, someone for the $90 million a month. That's crazy.
And the funny thing is, I don't even understand how there's that much business out there to be had.
That's the crazy part.
With so many lenders entering the space, there's only so many fix and flip investors, and maybe even that's not something that lenders are that focused on.
Have you seen I've heard of this as people saying there's a transition to construction now.
Yes, well, they have to transition because there's
got to go to raw land now.
Yeah, there's no fix and flip business, or it's hard to find deals.
Right.
And the people who have been flipping houses for however many years, they already know all the lenders. They already have their relationship. Maybe they've dealt with the same lender.
And they're going direct to the institutions now. A lot of them. I've talked to so many of these like national builders, and they don't even need to go to our clients. They're just going directly to the institution.
Once they get to a certain point, they can bypass the originator in some cases, I guess. But that's a huge amount of volume. But even let's just say it's an investor that does maybe 10 flips a month. Even that's quite a bit. But maybe they have their relationship. They don't need to mess with it. They don't need to go look for another lender. There's only so many real estate investors out there. So the lenders have to just figure out what other products are there. There's the rental loans are really popular, and
let's talk about that real quick. What is your take on DSCR? Because it kind of it just shocked me. I was like, this is stuff that the banks used to do. I used to do it as a banker, and like a lot of our conventional colleagues have been doing for years. And it's just like all of a sudden it appeared on our side. I think about 3 years ago. I think 4 years ago.
Yeah, in the beginning, I first saw it in I think it was 2016, and I think maybe Corvest and maybe one other company were the only ones that were doing it.
Was like one of the Lending Home and Corvest were like one of the first to jump in.
Yeah, and I'm surprised it took so long for the institutional capital to catch on because it's such a good. It's such a good product.
For them, it's wonderful.
Yes.
It's a fantastic product for them. I mean, you can chop. It's essentially a conventional mortgage. So I mean, without all the red tape.
Yeah, and it's a 30-year product. Yeah. So it's I'm surprised because it's higher yields than conventional mortgages. So whoever buys those consumer home loans that are 30-year product, this is even better because it's
way better.
Yeah, higher yields, and
there's much more appetite for it now. I think that's the interesting component about it. Is like a lot of, our industry as a whole is an indication of like Wall Street not really knowing what they're doing, and then all of a sudden, wait, what's that? Right? Yeah, that's pretty cool. I want that too. And then all of a sudden, their friends want it, and their friends want it, and all of a sudden now everyone's doing it, and like that seems to have been the trend, at least from my standpoint. It's not any kind of crazy, quant or crazy analyst. It's literally like, well, that's pretty cool. Let's do that.
That said, with construction, I have concerns, but I think
I want to hear about that.
So lenders will definitely learn construction because they have to. That's kind of the thing that's in demand right now. But I've never originated a loan, so I've never been that involved in a loan, let alone a construction project. But from what I know, it's way more complicated. So even if a lender learns it, I just have concerns about the viability of it being done on a national scale.
And I think right now a lot of folks are taking it on because they can just sell it, right?
Yes.
They don't have to worry about managing the asset.
Yeah, and it makes sense. If I was in their shoes, I'd probably do the same thing. And it's and you're right, there are capital providers out there.
Well, a couple of years ago, they couldn't sell construction loans if you wanted to. Yeah. And now they're all buying them, and I think they understand how to underwrite them and how to manage them. But even 2 years, 3 years ago, it wasn't as prevalent.
And then some of the large national lenders that just have so much capital that they've raised, whether they're a fund,
they have to,
or but they're starting these wholesale programs where a loan originator can just rely on that company, even though it's not their product and they're not funding it off their balance sheet. It's hey, I have it available. They have the relationship with the borrower, so why not? Just have someone else deal with it. That's it's their expertise.
Yeah, I noticed that too. And what's interesting is you're seeing not just. I mean, you've always had for the past almost 6-7 years now. We've had all of the aggregators and with new entries and people like that. But then there's also, like you said, companies that have been traditionally balance sheet programs now partnering with some major institutions or pensions and really getting massive horsepower. And we've had some guests on the show that have been lucky enough to get that, but they've kept their balance sheets, which is good. They've really grown. And that's another thing I want to ask you about. Like, let's talk about like the growth, because you worked with one of the largest debt funds and lenders on the commercial side early in the game, Loan Oak, right? And they're still massive. On the kind of resi fix and flip, I mean, you work with all of the now what I consider national shops. Like, let's talk about kind of like how they've grown and what you've seen as kind of common thread. Because a lot of people, one of the common themes of the show is we talk about like try to figure out what the common thread to growth is, and we have an outside perspective. We're seeing a lot of these folks do it, so I want to hear your take on that.
You mean more with the institutional backed lenders?
Actually, more of the folks, because not the institutional backed folks. Because like I'm not talking about the aggregators. I'm not talking about like the loan buyer. I'm talking about companies that have had our retail operation, have added that wholesale component, are borrower facing, and they have their own operation and they're growing nationally. Like guys like Loan Oak, right? But on the resi side, and I want to get your take on it. Like what have you seen in common amongst these guys and how they've grown from your perspective as clients?
Yeah, one common thing I've seen with a lot of the companies that have done really well is they just invest heavily in their marketing, and not only online or AdWords or whatever. I'm talking like they sponsor every single event. Not everywhere. Not necessarily the ones that we go to within our industry, but more the ones that the real estate investors go to.
Right.
And those are also not that easy to find. But and it's a lot of it's local.
They're involved in the RIAs and the masterminds and stuff like that.
Exactly. Or they're in the Home Investors Network.
Oh yeah.
That's a big one.
Yeah.
Or bigger pockets. They're more involved where they
which they're going to have their own show. You heard that?
Yes.
In October.
I think they had one in 2019.
Yeah, with COVID, right? That was the first show, and then we're going. We're going to see
New Orleans.
Yeah, we're going.
Yeah, I heard about it.
Yeah, I'm excited.
Yeah, I should look into that. I had it on my radar because I set up an events page on Private Lender Link to list all the events, and even if there's one I'm not attending, I'll still put it on there because it's for my own purposes.
So if you're a listener out there, you're looking for new opportunities on the investor front, real estate investor front. Bigger Pockets is doing a show in October.
Yeah, so there's not.
So they're going to all the shows. They're doing a lot of marketing.
Yes, they're doing a lot of, and they understand it's a relationship business. So they they really embrace the broker relationships as well as the borrower. Yeah, the broker channel as well as the direct investors.
Right. Do you think that most of the folks that are considered successful out there, the bigger shops, have those like kind of like broker channel management teams as account executives?
Yes. Yeah. A lot of the big ones, like I know Lending Home has it. And most of the other ones do as well.
I just interviewed Dalton, and he was at Lima One. He was saying they built just a broker channel management team. So, and that seems to be a pretty common thread.
Yes, yeah. So the RCN Capital is one I'm really impressed with, where they've I don't really attend the consumer mortgage events.
Yeah, they go to all the consumer shows.
They go to all of those, and they've done such a good job of building up that broker network.
And Jeff's involved. Like he was telling me to join all these local realtors association, so he's involved in all of that. And kudos to him for getting his it's a different angle.
It is, because I see some shops where they don't even want to get out there and meet people. They just want to do online advertising and we'll reel them in with the rates. The rates are going to be similar. It's just more, do you like that lender that you're going to do business with? Do you have a real relationship with them? Have you shook their hand
right?
But that said, there's a lot of real estate investors that don't ever go to events or they don't do networking. So it's tough. Like you have to have a lot of boots on the ground. So you have to have local offices in the big markets that you serve, and just get more loan officers and people to build those relationships.
Nice. Yeah, I agree. I think those are all the common threads. Well, let me ask you this though: do you find that all of these, like quote unquote, I want to say successful shops, because I can identify some that are not actually national, and I consider them very successful.
Agreed.
Are they all? They're not all national.
No, not at all.
Right,
Not at all.
They focus on certain MSAs, like
and some of them have just done really well at. They've either been around a long time, or they've just done a really good job of just networking within their one market, and they've never even had to do that much advertising, or marketing. That's been a lot of word of mouth. And
I found some folks are actually like they manage hundreds of millions of dollars, but they're doing almost a billion plus origination volume, but they're like literally in like 3 cities.
Yeah,
it's crazy.
And some of them never really get out there. Some of them you never see any marketing from them. So it's a lot of shops I've seen over the years of, it's been really impressive to see what they've done. But that said, now there's a lot of competition, and what I see is that some of these companies that they've done really well over the years, but now they're losing customers, or they recognize the competition, and they recognize the need to do more marketing, and maybe have a marketing department or hire a marketing person.
Right.
And it's just become essential for some of these companies because it's just so much competition. They can't not do it.
I've always said, we just did a kind of a little like video segment for our marketing stuff, explaining why our clients need to be marketing. It's like Anthony said it years ago, you could be the best in the world, but if no one knows that you're the best in the world, it doesn't matter.
Yeah.
Tree in the forest, right?
Yeah.
And so like, going back to marketing, a lot of our clients are smaller. They're trying to scale. They're trying to, build and build and build. With digital marketing nowadays, like what's the one thing they can invest in? It's like, they can outsource the SEO. They can do all that. What's the one thing they can actually invest in? Should it be people? What do you think? Should it be people to manage those relationships? Should it be, of course they got to sign up with private lender league. That's one thing. But like, What's the one thing they should invest in from a marketing standpoint, or a common thread that you've seen?
I'd say it's you got to do it all. You have to.
There's not one little thing they can do.
No, I can't think of one thing. The easiest thing is social media. Even though there's some lenders just don't. Like even for me, I struggled in the beginning with I don't want to have to post every day just to put something out there. But it that's the easiest and cheapest way to market.
And that's the funny part is people don't appreciate the fact that Facebook, Instagram, LinkedIn, now TikTok. Literally, Ruben is like, I'm on TikTok, bro. I'm like, that's good for you, man. But all these platforms, if you think about it, are free marketing platforms.
Yes.
Yeah. It's you don't have to pay anyone. You may have to pay for ad space, but you don't have to pay it. You can use it yourself and manipulate it.
And that's I understand why a number of lenders it's a bit difficult to get started or be consistent. But there's companies out there that can help with that. There's all kinds of marketing consultants that could just tell you what the social strategy should be and get it done for you. So there's an expense if you have to pay someone, but social, there's you just advertise wherever you can.
Right. Any strength still left in print? Some people tell me that print still works for them. I'm like, I throw away every single mail. I don't even check mail.
Well, the only print I keep is all the industry magazines, like
that's different, right? Yeah, trade magazines, that's different. Shout out to Originate Report, that's our magazine. But it's those are trade industry magazines, but like mailers. Do you think anyone actually does mailers?
I've heard of some lenders using mailers where they target, they collect data for local markets and try to figure out who's a real estate investor or when their loan's maturing, and then they send out a postcard. I've heard of some lenders that do cold calling and have been very successful at it, which is, you have to have the bodies to do that.
We have some clients still that have a very traditional approach when it comes to their marketing. It's a cold call center approach, and it works.
Yeah, and different shops have their different, different strengths, but you have to explore all of them. And
what works for you, right? From a company culture standpoint.
Yeah. And there's some companies that buy leads, and that's enough to kind of meet their volume goals. So it kind of depends on size as well. There's some shops where they can't handle too much marketing and too much inbound or too many leads. So so some of them have to control where they advertise and how much they do, and you know, so it.
Speaking of leads, I actually want to ask you this. You know, we're still kind of in it. We're still kind of in a pandemic. It's last year, 2020. I mean, how did that impact you guys? I mean, were your clients just like knocking at the door, help us out, we need more leads, or was it okay?
No, a lot of them were, hey, we need to cancel and stop paying. You know, so it was an interesting time because I had to figure out which lenders were still lending, and the ones that were, I knew which ones were. They, you know, it was more the lenders that you know, they use accredited investors to fund their loans, or they have balance sheet or even funds. Yeah. And you know, I have to figure out, you know, who was still lending. So so the revenue that Private Lender Link gets is a lot of it is subscription, where the lenders pay to advertise on the site. Right. A lot of those canceled. You know, it dwindled down. I mean, it was like 75% of it was halted, or they just said, "Hey, we have to cancel," and it was, you know,
and that's the first thing that goes, marketing dollars.
Yes, I mean, exactly, and it makes sense because they couldn't, you know, if they got leads, they couldn't do anything with it. So that was the only effect it had, and that lasted for several months, and then it came back.
Yeah, how long did? Yeah, so when did things kind of
starting in September? I think it really,
that's about right.
Yeah, it really started coming back up to normal, and then it took until the end of the year, and even January and February there was a lot of new signups where all these lenders now had enormous amounts of capital available to lend.
That was interesting. Like, not only did a lot of the capital providers come back, but they came back with a vengeance. I mean, the current condition of capital markets from Wall Street, I've never seen margins this big for our clients. I've never seen this multitude of products available for our clients. It's really, really crazy. It's probably more robust than it's ever been before.
Yeah, and who knows how long it'll last? But that's
what scares me.
They have to take advantage of it while they can. And
and that. I mean, so let me ask you this: like, you know, you talk to, I mean, you interface, but you also talk with these folks on a regular basis, and like, what were their feelings like last year, and what kind of vibe did you get?
There was a lot of them that just, they didn't know if they were going to stay in private lending, or if it was kind of the end of the road, or
is this another 08?
There was some lenders that I reached out to that have been around for a long time. Like there's this one lender I remember in Maryland that I'd been to their office years before, and it was a barn in one of their development projects, and I reached out to them, and you know, this guy's a bit older. He's only lent in the DMV area for 30 years or whatever, and I said, hey, are you still lending? What's changed? Then he went off on this huge rant and started telling me about, all these Wall Street companies, they've been, you know, I knew they were going to just bomb out and, you know, and not be around and not last that long. Right. And I've seen everything. And, you know, it was, I'd get some of that where there
was a lot of resentment from the balance sheet lenders, the fund managers, like, you know, as Wall Street started taking opportunity away from them.
Yeah. They were all excited because they thought, less competition, finally, you know, get some relief and get some more deals in. But even some of the fund managers I talked to, they're on pause. They had the capital. They just didn't want to, they want to put out, you know, if values are going to drop, and they didn't know, you know, the valuations are always the toughest thing when the market
ground
turns.
Was shifting underneath you. I mean, literally. I mean, especially in some of the secondary and tertiary markets. I was talking to you know, Greg over at Arixa about this during our show, and he's like, we were fine. They were fine. We were doing okay, and we weren't worried about as much as values, but because they're so relationship driven, they were able to have reliable borrowers, but they were not, you know, beholden to Wall Street. And so, like, the interesting takeaway for me was, you know, I'm a kind of agnostic, right? With my clients. I mean, while I would love to, you know, build your fund for you, I really, at the end of the day, I want you to grow. So whether that means through Wall Street, whether that means through your investors, you know, my goal is to help you grow. But at the same time, I want you to grow for 20, 30, 40 years. I want you to do this and retire. I don't want you to
not be one cycle and out.
Right. And we're due. I mean, this is kind of a blip on the radar if you think about it. Like, we're due for something. And, you know, that goes to kind of the futures. Like, what do you think? I mean, I always ask people this on the show, like, you know, bullish, bearish on the market right now, on private lending, not Wall Street, but private lending in general. You know, are you bullish or bearish? What do you think?
I'm bullish, but I really think at some point, whenever there's a change in the housing market, it's gonna affect how many deals can be done in
Something's
private
gonna
lending.
happen.
And then you know, there may be some smaller shops that they'll always be able to get deals just because
Right.
they have those relationships. But I just think volume's going to reduce. But one thing that came out of 2020 is all these lenders realized that they just had to diversify their capital, and I'm sure a bunch of them have started a fund.
We did record numbers in 2020 on my team, and we're still doing really well. And I think the truth is that people, and there's two reasons for that, right? It's number one is you need to make sure you have reliable capital that will not pull out in the middle of a crisis. And high net worth investors, typically it's a relationship game. And if they really are high net worth investors, are likely to be more understanding. Hey, I understand, do what you need to do. And if you take care of them, they're probably not going to break down the doors in a crisis. They're probably going to realize, okay, I'm going to do better here than I'm going to do anywhere else. But on the flip side, there's also something to be said about the volume of consolidation that we're seeing. And it's not what we thought it would be. I thought that we'd see a lot of like these bigger shops from Wall Street and their proxies or the hedge funds start buying up these companies. That's happening, but it's happening they're taking a minority stake or they're setting up an SPV. We're seeing a lot of consolidation at the retail level too. So, but at the same time, the point I'm trying to make is the most common thread that you see amongst people who are being bought up or being invested in by these groups, they've got a balance sheet, they've got a fund, they've got something that shows they can manage assets. And so that's the message I'm trying to get across these days. Is like, you can sell all day long. I encourage you to sell. Those spreads are awesome, but you should also think about having your own balance sheet and have your own fund or something, because that's going to make you way more attractive to a seller, come 2-3 years from now.
Yeah, and I've seen there haven't been that many acquisitions, but there's been more investments lately
Investments, yeah.
Yes.
It's like, I'm going to buy 20% of the company.
The originating company or the operating business.
Company.
Yeah.
And then that eventually it happened with Lima. they recently were bought by MFA, and they started with a small percentage in Lima. So that's the evolution of it. But Lima also had multiple balance sheet funds. They demonstrated the ability to balance sheet the loans and manage the assets.
Yeah, and that takes a bunch of time to build, and then you have to show that diverse capital structure, and then you have to have technology, because all the investors want to see that you have.
I actually want your take on that, because you're kind of a tech guy too, right? And so you got a background in on online stuff, and I know you have a personal interest in it, and like that's also the opportunities presented. I mean, it's kind of funny to me. It's like there's a lot of third-party software providers, but then every one I've had on the show, they've all told me I built my own.
Yeah, I know.
It's so weird.
And maybe that's why, as they wanted to control it, and they wanted to be a part of the value of their business.
That's true, because you get about a multiplier if you own proprietary software.
Yes, yeah, and I've had this conversation a bunch of times with lenders of, hey, do you want to take the time and energy and money to build your own system, or do you want to just lend and operate your business and let someone else take care of the technology? And I think it depends on each lender's goal. Or some of them don't, they think that they could just build their own and it's one time and they're done. But they have to just have they have to have a technology consultant that they're constantly paying to operate, to upgrade it and new features. So
millions of dollars. I mean, not just like payroll and operations, and just
And I've seen even smaller shops that try to build their own based on whatever Salesforce or any other
we
CRM.
Tried that one time. We tried using Salesforce. It did not work for us.
So I use Zoho and I've learned how to build stuff within Zoho, and that's my favorite. But for a lending company, it's, unless you're a certain size where you're just really big and like I said, you want to make that part of the value of your business and you want to control it a bit more, then maybe it makes sense. But then again, I've seen some bigger shops that built their own technology and they just got fed up with it and said, hey, we're gonna go with a third party company that does this for a living, and we don't need to make it, part of the value of our business.
But it's never been as robust as it has been before either. I mean, all the companies that have been kind of like household names have expanded their capabilities, but we get new market entrants from all over the place, and the options have never been greater.
Yes.
Are you also marketing to those folks and working with those folks as well?
You mean the vendors? New entrants?
They're just service providers like vendors.
Oh yeah,
and, I know we're on your website, but besides that, like anyone else who provides a service to the space, they can also find you.
Yes. So my goal with when I built Private Lender Link was really, it was mainly just to focus on finding lenders, but I just got tempted with other things that, hey, well, I have all these people on my site. Maybe I should build a service provider directory.
Right.
And
I need this.
and,
Let's go look for that.
Yeah. Or an investment directory where there's a list of funds or trustee and companies that you can invest with. So there is a service provider directory. So I do market some of those companies, and the technology especially is one section I've optimized where I've it's gotten to the point where that's ranking pretty high, and it just takes a lot of time. Like now I have to work on the legal section, and then that I have to add content to, and it's hard to get people to write the content.
Well,
so
we'll
I have
help
to,
you out there.
sure. So yes, to answer your question,
Let me ask you this though. So private lender link has grown so much now, and looking into the future, where the industry is continuing to grow, continuing to become very standardized. I mean, what's in the future for private lender link? What are you guys working on?
So the immediate future is there's a major rebuild of the website happening right now, and then the new thing that's going to happen in the next few months is there's going to be a new service offering. So I've learned this over the years of people reaching out and trying to navigate and try to find the lender that they need. And so the new offering is going to be, you have three options when you come to Private Lender Link or when you need to find a lender. Option number one is self-service. So whatever lenders are on the site, there's tons of information about their guidelines and about their company. So you contact each company.
Yeah, figure it out.
Yeah, you do the research, you contact whoever you want.
Right.
They're paying for advertising. There's no cost to you.
Right.
The second option is a referral or recommendation. And the model when I started out was a referral fee, but it was a mess because it was an honor system. I didn't have, I had some tracking, but I didn't have a proper system to track it. But that's being built right now. So
fantastic.
So option number two would be, hey, if you want a referral or recommendation for a lender, we're happy to do it. But to be very transparent, the lender's going to pay a referral fee as long as it's not in Nevada or as long as it complies with
compliant states, of course.
Yeah, but that's it's just the idea is to be very transparent. And hey, if you're a broker, the lender's going to pay us a quarter point. If you're a direct borrower, it may be up to a half a point. But then the third option that's going to be a new service is full service brokerage, where Private Lender Link would be the originator. And this is something I never had planned. For the last 10 years, I always avoided
is Rocky Butani jumping into the lending game? Yeah.
I would never say that I'd be a lender. I would never put myself out there as a lender, but I'd be a broker. That it's not going to be for everyone. It's going to be, hey, if you don't want to deal with the lenders directly, if you want a professional to help you through the process, then
see more on the borrower side.
Oh yeah, only on the borrower. But the brokers, I do business with so many brokers where I connect them with lenders, and so there would always be that referral.
And they're going to need your help, especially in states like California. So
yes, exactly. So that's a new thing, but it's not going to be. I don't think it's going to be the biggest part of the business. But
when can we expect all this I guess what do you call it? Is it revamp or is it
relaunch?
Relaunch. When can we expect Private Lender Link 2.0 to come out?
In the fall. So probably in September, the new website design is going to be launched. Okay. There's going to be a new loan form experience where people can enter their data about their deal and save it and then share it with whoever they want.
Okay.
It's still not going to be a model where you submit your loan and then we sell it to multiple lenders. That's never been the model. It's either advertising or referral, but that's a really big thing that's long overdue. It should have been done a few years ago.
It's a good idea. Yeah, I mean, I still get a lot of, I would say, people who just they don't have a sense of where to go yet. Yeah, and that's still very much in need. And then you've got a massive gap, like brand new market entry, whether it be on the builder side or on the lender side, it's still, or the originator side, the massive gap in knowledge nowadays because of that commoditization. So
so that's the immediate plan, and then long term, the plan is once I perfect the current website and the new model. Once that's perfected over the next year, maybe even year and a half, the plan has always been to be not only Private Lender Link. So the idea is that
you want to expand into other industries.
Yes,
nice.
Yeah. So it would be the next one would be multifamily. And I originally thought commercial real estate, everything commercial real estate, but multifamily is kind of its own. It's kind of its own animal that I just think it's easier. Commercial real estate is so broad. And
and the food groups are just too broad there. Multifamily is you got people who just do that.
Yes, and it's manageable, so it kind of makes sense. So the idea would be to once Private Lender Link is perfected, the way I've been planning it is to duplicate that, and that would be multifamily link, and then a few years down the road there'd be a CRE lender link. So everything would just become lender link, and then along with that there'd be an app that just kind of automates the process of connecting people with lenders.
You're gonna need more team members,
yes,
man.
I know. So that's down the road. I mean,
I like it though.
Yeah, so it's still the whole multifamily expansion probably won't happen until 23. I think I still got a long way to go, and lots to do.
Well, congrats. I like the vision, because there's a lot that needs to be done. And what's nice is our sector is a really good jumping off point into those spaces, because our clients in your relationships, they dabble in those spaces. Some of them do it only, and so it's a good way to break in. So I guess we'll see you at the Western States Craft shows and the Crittenden shows and those things too.
And I've already been going to those over the years, and it's been tough for me to get into those spaces because I just don't have that audience. Most of the audience that I get is residential,
right?
But there are a lot of commercial real estate brokers that that come to Private Lender Link when they need a bridge loan, and I know a lot of the bridge lenders for commercial real estate throughout the country. So so right now it's kind of mixed, but eventually the idea is that once there's another website or another 2 websites, that Private Lender Link would just be focused on the residential, and then on the other sites you'd still be able to find the bridge lenders, the private lenders that focus on commercial real estate,
right?
On those asset classes.
And that's smart, because right now the market's heading that direction from a private lender standpoint. It's for the past, I'd say 3-4 years now, it's been a pretty clear bifurcation between lenders who are doing resi and lenders who are not.
Yes, true.
But even within that now, you're starting to see guys, we only do rental, we only do construction. Like it's starting to become much more siloed, if you will.
Sure.
And so they don't, like guys who do commercial, they don't touch this resi anymore.
Exactly.
They used to do all of it. But
I still see some. I've seen only a few cases where there's a commercial real estate bridge lender that does some resi because they get requests for it, or
they know how to do it, but it's not their primary driver.
Yeah, and they do it because there's opportunity, and there's a lot of competition in the commercial bridge side as well. So they have to see what other options they have.
Fantastic.
Yeah,
well, that's great. I mean, I'm really looking forward to it. I think that's the natural evolution of what the need is. And that means we'll definitely see it at all those different events. We'll try to help you as much as we can with our clients. Now let's talk about this before we close up the episode. All right, so we are now officially in conference season, right? It is fall. It's going to be August soon. So what's the next show you're going to be at?
The next show, as soon as this episode is done, I'm heading to San Diego for the California Mortgage Association event.
And if you're a California lender, you need to join CMA. It's important you join.
It's a smaller event, but it's great, and you'll find a lot of these lenders that are that have been lending for a long time and a lot of them are not institutional, or they don't sell to the to the aggregators, but again there's a mix.
But they've been through cycles, and they've I mean, a lot of our clients at CMA have a lot of legacy knowledge about the industry, and that helps them.
Yes.
I was interviewing Pete over at Fidelity, and he was telling me, Chuck knew exactly what to do.
Yeah.
Right when COVID hit. So and so that comes with years of knowledge.
Yeah.
So once again, if you're a California lender, or if you lend in California, you should definitely join CMA, because you'll gain so much just wisdom and knowledge by networking with these folks. But after CMA,
it's Captivate.
Yes, you will be.
Yes.
All right.
Yeah,
our show Captivate.
Yeah. Captivate. When I went in 2019, it was pretty impressive. It was amazing, and there were so many people there that I'd never seen at other events. Or you guys brought out a lot of family offices that I never would have attended any other event.
I mean, shout out to Ruby and our marketing team. They've been really smart about networking in that space too.
And I like the idea of just making it focused on capital, even though you just get a lot of loan origination business there as well. But the theme is to connect capital providers with lenders. So
we've got some new faces coming out this year. Upstream Wall Street folks. We've got some really great families coming out this year. So I'm really excited about this year.
Yeah. So anyone who's a fund manager, it's a great place to.
Or
not even only a fund manager. If you're just looking for family offices, or if you're looking whatever your capital needs are.
And that's what's important for this year, is that the families out there, and the high net worth investors and the RIAs right now, they have appetite for this stuff. They're not getting what they used to on Wall Street from a fixed income standpoint. So this is a really good place to be for them. So they're asking me about this. This has never happened before. They actually come to me now, like, hey, you seem to represent a lot of funds. So definitely, if you are thinking about networking with high net worth investors, place to be. After Captivate, which is going to be great, by the way.
Then it's Originator Connect, which is...
Oh, you go to that. Nice.
Yeah, it's
right
easy
after.
because it's across the street.
Right.
And even though this is not private lending, it's consumer mortgage.
Right.
I meet
A lot of our clients go to that show.
Yeah, and it makes sense because it's it's across the street from Cosmo, and it's it's the same weekend,
right?
Or it's the weekend right after Captivate ends. But I go to that one because there's a lot of consumer mortgage brokers that I meet that every once in a while they'll have a private mortgage deal.
A lot, yeah. Especially now that our clients are doing heavy volume in rental. I mean,
yes,
investor loans is massive.
Yeah, so I think you're going to see a lot more private lending firms and at that event.
We have a partnership with them, so a lot of our clients are telling us like, hey, we're staying the weekend for that.
Yeah. And after that, I think there's a CMBA secondary market event here in Orange County after that. But I'm not going to that because I just don't deal in that space, and I want to learn about it. So it's coming, but not the right time. I have too many other events to go to.
Yep.
So.
And then we'll see you at the October Vegas show for CMA.
Yes, yeah.
And then of course AAPL.
Yeah, AAPL as well. And then I think the last one might be IMN.
Oh, you're going to IMN East? Yeah.
IMN West. Yeah. I missed East, which I regret, but
I really do regret that. Like I couldn't get out. It's just family.
And it's also a big trip. It's
across the country.
Yeah. I already went to Miami in March. I wasn't really in the
you lose a whole day.
Yeah.
It's really tough. I mean, if I'm started, if I'm traveling to the East Coast, I'm going to spend a week there.
Yeah,
that's
me too. That's what I did the last time I went there. I went there for the Pitbull conference, and I just stayed there for another 5 days just to hang out and just to meet clients in Miami, because that's the only time of the year. I mean, that's the only one time.
When else are you going to get out there?
Yeah, exactly. I'm not going to go there until next year, so might as well make the most of it. And that's what I do whenever I go to conferences. I like to meet lenders in person.
Oh, for sure.
I like to go to their offices, get to know them, because that's kind of one of the core parts of Private Lender Link is I try to vet the lenders as much as possible.
Right.
And have a relationship with them. So I like, when I refer
they're a real
lender,
lender. They have a real office. They're not some, shady, some guy operating out of his garage kind of operation.
Yeah. And people will notice whenever they ask for recommendations, I'll always mention that, hey, I've met them in person.
Yeah.
I've been to their office, and it means a lot. So I try to do that whenever possible.
I do the same thing. I mean, I just started doing it recently. I know you've been doing it for years. It's one of the best things I ever did. Like you get to see the environment they work in. It really influences who your understanding of them as people. So, and
you get to learn by having these conversations that you wouldn't have with them at a conference. When you sit down with them at their office, or you got to lunch, you get to learn a lot more that you wouldn't in just a casual, hey, well, I saw you at this event. Let's
longer form and really deeper. Yeah, for sure. Yeah. All right, man. Well, I think that's all we have for today for this episode of Lender Lounge with Kevin Kim. We're gonna see you I think we're driving down today as well. So. For our team's and driving down to CMA, so we'll see you there, and then we'll see you there, and the rest of you guys over at our show in August 18th to the 20th at the Cosmopolitan Hotel for Captivate. Hopefully, this episode comes out before then. Yeah. But even if you
there's always next year.
Even if you didn't, there's always next year. We always have Innovator as well, and keep a lookout for us at the various shows throughout the year, because we have new swag for the show, and we're always looking for guests. So please let us know if you want to be on the show. And once again, this is Kevin Kim for Lender Lounge, and we're signing off. Thank you very much. And thanks for listening to Lender Lounge with Kevin Kim. I hope you enjoyed this episode as much as I did. If you did enjoy, please leave us a 5-star review on your podcast platform. And be sure to follow our show to be notified of new episodes. If you're on YouTube, don't forget to smash that like button and hit subscribe for more content from all of us here at Jurassic. Lender Lounge with Kevin Kim is available on all podcast platforms. Referrals really help us spread the word, so please send this over to someone you think might enjoy it. See you next time. This is Kevin Kim, signing off.